Hello, and welcome to this new edition of BCR Webcasting. Today, I'm delighted to be joined by Çağatay Baydar, who's Executive Chairman of TEB Factoring in Turkey. He's also Vice Chairman of the Executive Committee of FCI, and Çağatay will be speaking at our 8th Alternative and Receivables Finance Forum, which will take place on the 23rd and 24th of November in London at the offices of Clifford Chance. Çağatay, welcome to this edition of Webcasting, and very happy to see you.
Thank you, Michael. I'm very glad to be here with you today. And hello, everybody. We would like to see all of you in London for the next BCR conference. I'm happy to be there to speak during this conference. Yes, Michael.
So this conference is about fintechs and alternative forms of receivables finance and challenges. So I'd like to ask you get your views on some aspects of that, Çağatay. And of course, we saw fintechs and challenges springing up in the post-banking crisis period. And I just want to get your views on why was that? Why did those fintechs spring up at that time? And what was the attraction for SMEs to be looking at alternative forms of receivables finance at that time?
Okay, Michael, let me start with the main banking crisis of 2008 and 2009 as a milestone for everybody. As you remember, it was a banking crisis started in the United States. And then the banks all over the world had problems, liquidity problems, and also credit cover problems. And then this led to decrease their funding facilities to especially SMEs. And of course, SMEs at that time, they started to look up a new alternative finance ways at the end of the day, since they are trading continuously. And then factoring, which is my expertise since 35 years, become a optional solution and also a potential solution for them, because this banking crisis teach everybody that there is a risk of for open account receivables globally. And then at that time, we see a tremendous increase in the factoring volumes after the banking crisis, because not only the companies, the countries, even the continents look for a coverage their risk, to cover their risk, to collect their money back, especially for open account receivables. And that factoring, which offers credit cover, collection services, and funding facilities, become a vital solution for SMEs. We see this trend right after this pandemic as well. So as you remember, during the pandemic, everybody gets scared about the insolvencies ratio. And then factoring again at a nicer volumes. So SMEs went to alternative finance, for me, namely the factoring industry, to cover their risk, their open account risk, and also to have additional funding, alternative funding than the banks, because everybody, the banking industry really decreased their facilities for SMEs. So yes, after the crisis period, we traditionally see an increase for the alternative finance. And this is why fintechs, who offers extra alternative fundings, are more in the markets, because they are at the service of SMEs.
So there was an attraction for SMEs to fintechs and factors as well. But of course, although there is that surge of demand, the risk position changes as well, and we'll talk about that in a minute. But
one more issue, Michael. I mean, the banks they are getting more regulations after the crisis. and fintechs are, some of them are out of the regulation, so they are more free, let me put it that way, more free and more relaxed to issue credit lines. And this is another issue. This is another issue which motivates fintechs to go to SME segment.
Mm. And that leads me to my next question to some extent, as to why we've seen cooperation between banks and fintechs in more recent years, and not so much at the beginning of the post-banking crisis period, but in the latter few years, we've seen a growing interest and growing cooperation between banks and fintechs. What do you see as the main advantages of that cooperation?
Yeah, after this big banking crisis, the banks are now much more regulated, especially with compliance rules, especially with GDPR rules, and Basel III regulations, etc., which allows them, or which prevent them to enlarge in the credit industry. And then fintechs, which are more technological than the banks, which are more agile than the banks, have found a room, especially for client acquisition. And the banks cooperates with fintechs in order to increase their client portfolio via fintechs. This is one issue. Secondly, fintechs who are small and agile companies can easily access for operational excellence. So they are also helping banks to minimize their workload, to minimize their overheads, and also to make the banks more digital. As you know, the banks has big IT departments who are slow or some bureaucratical issues. However, fintechs can easily act, and this really help banks to cooperate with the fintechs in order to be more agile and more quick, more efficient. So especially if client acquisition is an area, however, with the fintechs, for example, credit allocation process of the banks is now more quicker and effective, because there is artificial intelligence tool, there is algorithm behind that, and then fintechs could easily create solution for the big and slow organization.
So it makes a lot of sense, really.
Yeah, right.
The fintechs have that agility. They're able to bring in new technology very quickly compared to the banks.
Exactly.
So
and become cheaper as well.
Yeah, so cooperation does make a lot of sense.
Yes. Exactly.
But the other thing I want to ask you about, Çağatay, is in the current situation, you know, the political climate is difficult at the moment. A lot of markets are, it looks like a lot of markets might be heading for recession. How is that going to impact on risk assessment and risk profiles within the receivables finance sector? How are the dynamics changing between, let's say, political risk and insolvency hazards and you know, or the risk environment as a whole? How are those dynamics changing at the moment because of the current political and economic environment?
It's an important issue, and it's an important topic for everybody to evaluate, because during the pandemic, the banks and the governments gave liquidity, enormous liquidity into the markets, and according to statistics of FCI, which includes 90 countries all over the world, the dispute ratio and the insolvency ratio decreased during the pandemic in a very sharp way, which means that due to this liquidity, the insolvency and dispute rate went down, which is a very good sign. But unfortunately, now, with the higher rate of inflation and with the tighter monetary policy, I think the liquidity will be taking back from the markets, and this may break the liquidity chain, cash flow chain of SMEs in the market. So although we do have, as of today, very favorable insolvency rates, very manageable insolvency rates, in the years to come, I'm expecting to see in NPL ratios an increase. In cost of risk ratios, I'm expecting to see an increase due to the liquidity problem of the SMEs. So
in the years to come, or maybe in the months to come?
In the months to come,
Yeah.
I'm so optimistic. In the months to come, maybe, yes, this could start. And this is why fintechs or invoice finance providers or invoice finance, open account receivable finance providers need to be more careful to manage their risk. We will have, or we may have more difficult times in the months to come. So I am recommending to the invoice providers to be more selective, to be more careful, and to evaluate better their credit risk. So this is something that we need all to be careful as financiers.
Yeah, I guess during the pandemic with the government loans and banking, that was really an artificial kind of period, wasn't it? Which we haven't seen before. And now perhaps we're heading more into a period that was more like the period coming out of the banking crisis.
That's right.
Where demand surged at that point, but the risk situation was more difficult. What about ESG? That's an issue which is on the top of the minds of many senior bankers now, and that's an ongoing,
It's
an
a big
ongoing
issue. It's
issue.
a big issue.
What do you see as the main sort of challenges for implementing
The main
ESG
challenge,
policy?
The main challenge for everybody, not only for banks. We are not ready for that. We are all discussing and we are all wanting to put in place ESG procedures. We would like to enlarge, we would like to be more in ESG transactions. Yes, I agree. But even the banks are not ready. And the level of knowledge is not high, I must say. So not only the banks, SMEs have no idea about that. I mean, only big corporates has a, let's say, awareness on ESG. So first of all, we need to make ESG principles aware of everybody. So we need to advocate more on this issue. So I think the main challenge for this is that everybody needs to understand more on ESG principles. So it will take time, but okay, we are on the right track and we will work harder to put in place.
How can that happen within our sector? Do you think FCI can play
FCI
a
can
major
play
role in that?
Yes, FCI also in our mission statement, we are now putting in place ESG transactions. So everybody, not only IFC, FCI, IMF, ICC, the big banks, big corporates should make people aware about ESG. At the end of the day, this is a problem for everybody. This is a problem for This is a problem.
World.
This is a global problem.
Yeah, absolutely.
So everybody should play its own role.
Çağatay, finally, just quickly, for alternative finance providers trying to get into this market, what do you see are the main challenges for them? We've already spoken about the risk challenges. Are there more challenges for alternative providers to establish themselves in the receivables finance market now or generally?
Michael, with the level of interest rates, which is increasing, now there is a more appetite to be in this specific field for fintechs and for new emerging companies. So we have new players in the market who wants to take benefit of this high interest rate. But the name of the game in finance, in banking industry is high risk, high return. So yes, the interest rates are increasing. There is a nice appetite for the newcomers. There is a nice pie for them in the market, because SMEs are really looking for alternative finance, and there is a market out there. Yes, but there is a risk as well, because the SMEs who receive money with high interest rates may have difficulties to pay these loans at the end of the day. So for the newcomers, for the new players, I am recommending again to be careful by writing new loans. At the end of the day, high risk is silent. So this is the name of the game, and everybody should be careful about this. High interest makes the loans unpayable.
So it's about
careful.
So it's about getting this risk-return balance right.
Exactly.
And we seem to be moving into a period where risk management is going to be even more important and a highly focused activity. And of course, we've seen in the last few years that some fintechs have not been particularly successful in managing risk.
And they left the market. They are they are disappeared. So more caution is needed in the coming months, in the coming years, as we said before, Michael.
Yeah, and maybe when they are cooperating with banks, maybe that's something they can benefit from in terms of the bank's long history of managing risk very carefully.
Exactly.
Çağatay, thank you very much for your time today, and we will certainly look forward to seeing you next month, as I mentioned at the start, at our Alternative and Receivables Finance Forum. Just to remind everyone, that's on the 23rd and 24th of November in London at the offices of Clifford Chance. Çağatay, thank you again.
Thank you, Michael, and hope to see you all in London next month. Have a good day.